Hi everyone, it's Alex here at Session Capital Research. Very happy to welcome you to a very special webinar. My friend Brent Kochuba from SpotGamma is here to come and talk to us about why options trump stocks. A little bit of background to this. My professional career was in equities only, not options at all. And then when I started trading my own capital in public equities, I realized pretty quickly that the options market mattered, but I couldn't work out why. I didn't want to trade options. I still don't very much. One of our very smart subscribers, thank you, Karen, suggested I take a look at SpotGamma, and it was a huge light bulb moment for me to realize that the options market, which is hugely bigger in terms of capital sloshing around, was dragging stocks around and not vice versa. And once I learned this and internalized it and baked it into my thinking, it transformed my ability as an investor and a trader. So I'm delighted to welcome Brent today. He's going to tell you all about why options are so important, even if you don't trade them. And he'll tell you a little bit as well about what it is that SpotGamma does, which is very special and unique. So I'm going to hand over to Brent. I'm going to make him a presenter right now. He'll give you some background and on himself and his business, and we'll get going. So Brent, the floor is yours.
Thank you so much. It's awesome to be here with your community. It's an incredible community, and I always really appreciate the amount of content that you put out. It's really impressive. So, kudos to you on that, and obviously the people who follow you must love that type of in-depth content. And so I feel like that's my kind of audience. So I love it. And I'm excited to talk to you today, Alex, because we have options expiration tomorrow. And so these are always these incredible turning points where you can kind of see like the flex of the options impact, right? I think there's sometimes, maybe it's a quiet summer, random Tuesday, and not much is going on. You're like, okay, I don't really get the options impact. But here tomorrow, we're going to go into options expiration. And so we have some data and some stats and things like that we can show you all to highlight the impact of options trading. So with that, I know you had a couple of interesting single stocks you want to look at. And so if I could, I'll bring up a little presentation here on July options expiration and just show you. I know a lot of you focus on trading the underlying stocks, and actually mentioned that, hey, I don't like to really trade a whole lot of options. And I go, that's great. You still got to pay attention to the options market, right? That's the whole pitch here. All right. Hopefully my audio is still going there. I just got a weird.
Yeah, you dropped off. You're back on.
Okay, cool. Bam, there we go. All right. So options expiration is interesting, right? Because we go into an options expiration like this, and we see a lot of big positions move away, right? They expire. And then when those positions expire, that can lead to changes in the way that a stock or an index shifts, right? Like the S&P 500 or the NASDAQ or NVIDIA or whatever the stocks are trading. And before we get into that, I should just mention a little bit about who I am. I have over 20 years of experience, institutional experience. I keep saying 20 years, but truth be told, the father time keeps ticking, and I think I'm more closer to 25 at this point. I just realized that. So that's kind of funny. I used to work at Credit Suisse and Bank of America, and then I worked at an options market maker called Wolverine, and then I worked at a family office, and all that led to 2020 when I launched SpotGamma. And basically what SpotGamma was about was translating to everybody how the options market was driving stocks. And in January of 2020, that was a pretty novel idea. It was about, I had to kind of like prove that idea to everybody, and people kind of push back. I don't get it. And then all of a sudden you fast forward to GameStop in 2021, and everyone's like, I knew it. The options market like has all this impact. I told you. And so I'd have to say, yes. You all believe it now. So, and since then, options volumes have grown and things have really gone crazy. And they continue to get crazier on a daily basis here. So we're going to talk about that here today and just highlight a couple of single stocks now, and maybe talk about the index stuff now. So, this is not going to be a hindsight presentation. It's kind of like, what can we do right now? So let's just talk very briefly about why this flow matters so much. On the left is U.S. options volume since 2020. You can see it's up 150%. In April, we had record options volumes, obviously, with all that chaos around the tariff stuff. And then on single stocks, we continue to see individual names hitting record highs. We just saw NVIDIA, for example, trade 4 million contracts, a day or two ago, which is just, it's humongous. I mean, the notional value swing there is crazy. We saw this small cap stock, quantum stock, RIGT, yesterday traded 900,000 contracts, which is just bananas for this small cap stock. So these volumes keep getting bigger. And on the right side is the U.S. stock volume over that same time period. And what you see is, hey, the options volume is up 150%. And over that same time period, the stock volume is only up 30%. And not only that, options are a derivative, right? So there's this like leverage baked into it. And we can explain that in a minute. So this options volume is really outpacing things. And so you used to hear from some options analysts, hey, options are the tail that's wagging the dog. And it was kind of funny because I was just listening to a well-known Nomura bank analyst, and he goes, look, he's like, the options aren't the tail anymore. They're the dog, right? They are moving this market around. And it's such an interesting concept. And I mean, I'm jaded, I guess. I believe what he's saying, but we'll try to see if y'all believe it too. So how exactly does this matter for someone who says, look, I just trade Tesla stock or whatever the stock of the day is, I don't look at the options. Why do I care? So the way that this works is, Alex, if you and me and everyone listening here says, hey, let's all go buy, I don't know, name some stock, the quantum computing stock. In this case, I wrote AMC, but it doesn't matter. If we all buy 5 lot, 10 lot of options, or 100 lot of options, or maybe a hedge fund steps in too, 90% of the time when you trade an option, it's a market maker on the other side of that trade, right? It's very different from the stock world in that respect. So there's only a handful of big market makers. Their names you've heard: Citadel, Susquehanna, Jane Street. It's about 6, maybe 7 really big options market makers. So it's pretty concentrated who the liquidity provider is. So if we all suddenly go and buy a bunch of calls, and this is kind of what happened during the GameStop era, and it happens on a daily basis, you will suddenly find out, hey, I'm a market maker. Everyone just bought all these calls from me. I'm now short 100,000 calls. What do I do? How do I hedge this? Well, the obvious answer for them is to go and buy shares of stock. How much stock can that be? Well, in this example, if we use the 100,000 calls that the market maker sold, so they're short these calls, right? If the stock goes up, they're going to start losing money. So what do? They buy shares of stock. Now, in this case, you see here delta. Delta is a number that's an options hedge ratio that comes out of a calculator like a Black-Scholes, right? So if this is a 50 delta option, which is just an average option, you could end up with 5 million shares of AMC that you have to buy as a market maker. And you're not going to sit there and say, I'm going to piece this out over the next few days to hedge this thing. Like, you don't have that luxury, right? You don't know why people are buying these calls. Maybe they know something, right? Maybe there's an event coming up or whatever. So you have to buy that stock right now. And so it is that hedging, right? That's the transmission mechanism from options trading into buying the underlying shares or selling the underlying shares of stock. And that is what creates the movement that we here at SpotGamma are monitoring on a daily basis. With me so far, okay?
With you so far, keep going.
Okay, great. Now, this looks fairly complicated, this sheet here, so I'm just going to tell you that the critical thing to understand here is just because I bought these 5 million shares of stock right here, right now, that hedging isn't done, right? As the underlying stock goes up and down, I have to adjust my hedge ratio. That's what this curve is telling me, right? Stock goes up, I have to buy more stock. Stock goes down, I have to sell my stock. If time passes, right, as we get closer to expiration, like tomorrow, I have to adjust my hedges. For those of you who ever heard the term charm or theta decay, right? This is what I'm talking about. What happens in an event like yesterday where the market sort of had a mini flash crash, right? And the VIX spiked because they were going to fire Powell for a second, right? That changes the value of options prices, which means that the market makers have to change their hedges. So this 5 million shares is good for right here, right now. Stock goes up, goes down, have to change your hedges. Time passes, I have to change my hedge. Volatility spikes, right? Earnings is coming up, something like that. I have to change my hedges. So all that creates this continuous adjustment of flow. And that adjustment of flow, we like to call it gamma, vanna, charm. You've probably heard those buzzwords before. Those tell us like, okay, this is how the market makers have to adjust their hedges. How impactful will that be? And that is where we sort of unlock this edge of watching the options market to dictate how stocks will trade. So the way that we look at this generally is options positions build up over a calendar month, right? So they build up into the 3rd Friday of the month. That's when all the big options expirations are. That's tomorrow in July. So as these options positions build, then the stock hedges tied to those options positions build, and the impact of the options market we think build as well. And then what happens tomorrow at 4 p.m.? all those options positions in July expire, which means if you're a market maker in that original example and you have 5 million shares of stock tied to a bunch of calls, what happens when those calls expire? You don't need those shares of stock anymore, right? So what do? You got to sell the shares. So that can be the trigger for options expiration to have a big impact on the way things are moving. So if you just look historically at options expiration, not every single options expiration is this monumental turning point, right? It matters differently in each stock because one stock may have a big expiration, another may not. But if you look at the biggest options expirations in history, for example, in March of 2020, this is the most famous example ever. The low of the COVID crash in March of 2020 was the Monday after options expiration, right? What was the high, the pre-high into COVID, right? That February 2020, it was the day after options expiration, right? So it's like options expiration opened the door for the market to crash, and then it closed the door on the crash. And if you look back historically at a bunch of these big turning points, right? A lot of these are quarterly expirations, which tend to be a little bit bigger in size. You can see that the market will often turn at these key junctures. And so what you see here in May, for example, after this recent May expiration, and July looks a lot like May in terms of the size and the skew of how big call positions are, we had a good 2 or 3% correction right after May expiration, right? 2-3% correction, then you can get back in. June, right? Big turning point you can see here is like we unlocked, we cleared out these big positions, and then the market had this massive rally. And then, you kind of look at where we are right now, and I'm about to put a big red X on this map for tomorrow. You can kind of see how we may have a short-term topping point with this options expiration because we're going to lose a lot of call value, and I'll talk about that here momentarily. A couple of stats, and I want to give you the easiest stats to sort of understand. What we see here is that 2/3 of the time at options expiration, the performance of the S&P flips. So what do I mean by that? 68% of the time when the market rallies into expiration, you have a 68% chance that the market sells off after. Make sense? Conversely, if the market sells off into expiration, 68% chance that we turn around and rally. So that's what I call the performance flip. So statistically, pretty good odds, right? Certainly way better than 50-50 that the market will change direction in the week into the week after expiration. So if we're bullish the week into expiration, we'll be bearish the week after expiration. And you can look at that through a volatility standpoint too. So I want you to pay attention to this left graph, right? RV stands for realized volatility. It just means how much is the market moving. If you look at this expiration, the market has been doing nothing. Yeah, we closed at the all-time high today, but guess what? We're up like, 10 basis points in the S&P on the week, right? We really haven't moved very much at all. So this is a very low realized vol environment, right? The market's not doing anything. What tends to happen after expiration? Volatility expands, right? So this is telling us that volatility contracts into quiet expiration like we're having now, and then it expands the week after, right? Why? Because we wipe out all these options position and the market is freer to move around. So statistically, I think this is pretty compelling evidence that these options expirations really, really matter and impact the market. How big is this options expiration? So what you're seeing here is the size, and delta notional is a complex sounding term. All it's showing us is what is the stock equivalent of value, right? So how much stock equivalent value in options is expiring, and that's what the delta notional is telling us. And the thing that I just want you all to take away from this slide is that 90% roughly of the value expiring tomorrow is in call positions. So we are about as skewed to calls as we could possibly get. Why? Well, we're at all-time highs, number one. Number two, people have been buying calls like crazy into the market rally. So we've now built up this giant cache of big, huge call positions, which to me says, okay, we've stretched things to the upside, call positions are maxed, and when we move past options expiration, we're likely to have a little bit of a consolidation here, right? And that was my view into May. We got a 2 or 3% correction, and I think that could be on tap here for this this upcoming week because we're just so skewed, right? It's like an RSI, like we're way overbought in terms of these options values and these options metrics. And just in terms of the size of this expiration, this options expiration is about the same size as May as well. So this blue bar is call values, and this is each expiration has a line. And the orange bar is put values. Remember how I said quarterly expirations tend to be a lot bigger? This is September quarterly expiration. We're still obviously 2 months away, so that expiration is going to be really massive. This one's an average kind of monthly expiration, not a huge giant pivotal point in the market, but again a point for consolidation here, or a trigger for consolidation is the way that I look at it. So that is the framing for kind of why options matter, how big the options expiration that we're looking at is tomorrow is in place. And then I was going to jump to our live dashboard. I want to walk through a couple of other current stats, just kind of highlighting some positioning now. And Alex, I know a lot of the people can't ask questions, but anything that I should kind of clear up or touch on there, or so far so good?
No, that's great. Do that, Brent. And then after you do that, I'm going to ask you, for everyone on the line here, to say, okay, some folks on the line here, this is part and parcel of their daily workload. But for a lot of people, this is like, okay, what is this? This is a whole new dimension,
Yeah.
and I don't know what this is, and I don't know how to get this information. I don't know how to act on it. So maybe after the next piece, you could explain how people can use SpotGamma to their advantage, even if they're not an option trader, right? Even if, as you say, they just trade in and out of the SPY, in and out of the QQQ, in and out of the big stocks. How can they use
100.
your tools to advantage? Because I know it can give you a big advantage if you don't know how to do it.
Yeah, and that's 100% doable here. So hopefully now I've sort of set the stage. I've explained how big the options market is. You kind of understand what the link is right between that options flow and the stock trading, right? If you just go, okay, it's through market makers, I understand that. And then second, we sort of look at this options expiration tomorrow and we see, okay, a lot of big call values, and we've proven that options expiration statistically can be a turning point, right? So that sets the stage for saying, okay, I kind of get it. So now let's look at some options values. So one of the things that I think is fascinating about the options market is that it is a fantastic barometer for price action. So what I mean by that is you can see how overbought or oversold stocks are based on looking at options prices. So some of you may be familiar with doing this in a technical indicator where you're looking at like an RSI or something like that. But with the the options market, you can actually see in options prices how like bullish or bearish somebody is. And that can be extremely valuable to navigating flows, right? So while we're going to look at that, I think I'll pause for that, and I just want to show today's price action, right? And I want to show you how on a single day basis in the S&P 500, this information can be extremely valuable, because not only do a lot of you may be sort of lightly familiar with the options market, everybody on this call, I'm sure, is familiar with support and resistance, right? So we have this tool called Trace. And what I want to do with this is I'm going to turn off all the lines. I'm going to make this as simple as possible. And so put no markings on here. And all this is a heat map, right? And it's a heat map of buying and selling pressure. So if I wind this back to 9:30, all right, this is 9:30. Now, every single morning I write a note, okay? And so I write a note and I say, this is what the options market is telling us. So this came out today at 7:55. And I said, due to positive gamma, this is what bulls, this is the regime, right? 6,250 to 6,300. This is the range of the trading day. Now, why do I say that? It's because that's where all the big sticky options positions are. If you look, and you can read a bar graph, then you can understand this, right? Inside of this yellow plot, of this plot rather, inside of this yellow box, see all those big positions? Those big positions tell us that that's where the bullish flow is to hold the market in, right? Simple as that. And so what this really says is like, look, 6,250 to 6,300 holds. And ultimately, if the jobs number and retail number came out and just was a non-event, then that was bullish pressure to hold the market up. So that was the view heading into today. So if you look at the Trace map, this is just the real-time heat map of that. And I wind back to 9:30. Look at where all the big positions are, right? There's one big position here, huge support level at 6,260. Now, you may be saying, how do I know that's a huge support level? If you hover over that in our map here, you can see that's a 95th percentile strike. What does that mean? That strike is bigger than 95% of all the other strikes that are out there. That means it's a big support level. Simple as that. Why is that a support level? Because options dealers have to buy at that level. That blue bar means they're buyers. Now, up above, what you see is there's this other cluster of positions up here. See that around 6,300? If I zoom out just a little bit, you're going to see there's this other positions over here. Now, at the start of today, those are 85th percentile positions. They're good size. They're not huge. But look what happens when the market starts to open and starts to move up. See that? 940. All of a sudden, these bars are huge. Why are they so big? Because all these options traders came out there and they started to trade at that strike. So it makes this giant liquidity pool up there. And those of you who are trading stock, which I'm sure everybody on here does, what happens when you see a big liquidity pool at a certain stock price? The stock tends to move to that liquidity pool, right? It's like a magnet. So watch what happens. You see this giant target, and we have about a third of our members at SpotGamma trade futures only. That's all they do. They trade ES and NQ. And why? Because they look at this map and they go, I have giant support right here, 6260, and then look at these giant resistance levels up here. And again, I hover over the strike. Oh, 95 percentile. That's a pretty big strike. There's a ton of strikes up there clustering. And then watch what the market does. It just moves all the way up into it. So I'm ticking forward 10-minute intervals, right? And these positions just get bigger. And we just go right up there, and then we just pin right to it, right? So as I jump forward, you could just see we just move to that level and stick like glue. So the heat map is telling us like a magnet how sticky that level is, and all the stats are baked in here, and all this is just driven purely off of options. Like there's no sort of saying, well, I think that the jobs numbers are bearish, or I think they're bullish, or I think, interest rates are doing this and that and the other thing, so we should have this feeling about it. No, it's sort of like, what is the options market doing? How are options traders positioning, and how is that going to impact the market? And
So
so,
why I like, so it's Alex, I'm just going to interrupt you, Brent. So
yeah,
why
please.
I love SpotGamma's work is for this reason. So the moral high ground, as we're all taught, is we're all supposed to sit back, read all this macro data, read
Mm,
company earnings data, and work out, where is the market or this stock going based on earnings, revenue, jobs, GDP, inflation. And it's not possible to do that. It is a
mm,
complete folly. It's an absolute waste of time. Not least because you have an entire industry full of maybe the second brightest cohort of people on the planet
it's
after
true.
certain aspects of scientific research, hundreds of thousands of them, and a bunch of computer programs that they've all written, all doing that exact thing in a moment, right, faster than anyone normal can do it. And the net output of all that work is price, right? In price is all of that analysis, and more importantly, the conclusion of the market from all that analysis. And in my very strong opinion, and I speak as a heavily professionally trained fundamentalist, you don't need that stuff, right? That stuff's kind of interesting to read, to talk about at dinner parties if you go to
Mhm.
dinner with other boring people. But for trading, you don't need it. What this chart here from SpotGamma and, even a simple stock chart will give you some ability to do this. It's telling you where the puck is likely to go. Where is price likely to go based on the summation of all data and opinion of all information there is in the market at that moment. There's still a game of probabilities. Something can come out of the blue like it did yesterday that upsets the apple cart. Of course it can. But
Yep.
you have here the biggest weight of capital, which is options, not equities, telling you roughly where equities might go. And that's why this is so powerful. Right? And this requires a sort of a matrix, free your mind moment to sort of stop stressing out about what's in the Wall Street Journal. And did you read it early enough this morning? And did you listen to the earnings call for TSMC? I mean, again, it's kind of an interesting hobby if you're, so
Yeah.
inclined. But you don't need to do any of that because the industry's doing it for you, and they're giving you the data, and you can use the data to make decisions.
And their highest conviction trades, right, are going to show in the options and stock market. I think in the
Yeah,
options market often, right? So
that's
it's
right.
like they do all this research, and when they really become a believer, right, is when you put your money behind a position, right? So it's like,
Yeah,
okay, I need to buy these Nvidia calls because they're going to, and this is a great example, like now they've unlocked China, right? Oh my gosh, they're going to sell
yeah.
$20 billion. And you go on X last night, right, or 2 nights ago, and people are like, it's going to 180 tomorrow and all these things. And I'm going to show you in a minute what the options market was telling us. It was like, no one's positioned for that upside. No, they don't care, right? So you take a lot of that like hyperbole and sort of, I wouldn't call it trolling, but on social media you see all this like flaming of stuff, right? Like this is the biggest
Well,
thing
well,
ever. Everything is the most
yeah.
extreme.
It's also because think about how power works, right? So news is only news to those people who are not involved in making actual decisions, right? So the news that Nvidia was going to be open to sell H20s to China. Well, there were tens of thousands of people that knew that before it was announced. I
Right.
mean, if you run a big trading shop, it is your job, it is your day job to be in the flow of information and opinion about what might happen at the highest levels. It's not legal. It's not insider trading. It's your day job, right? That is how you make money. You need to know this stuff or have an opinion on this stuff before the news hits the wires. And so the possibility of those H20s getting shipped was, this is the origin of priced in. Of course it was priced in. So people
Mm,
on Twitter going crazy, like it's interesting, but that's the low volume stuff. Big
yeah.
volume would have already worked out. Is this likely? Was it not likely? And if so, how do I position for it? And if I'm wrong, how do I hedge for that outcome as well? And the options market can tell you these things well before news wires can tell you.
Yeah, and we can we'll show you an example that you brought up the Powell situation yesterday, right? The rumor of the Powell news, and so I just wanted to show what the dashboard looked like yesterday. This is 11:20, and you could see, this is right when that headline broke, right? Look at the size of these two positions, right? Huge position at 6,200. This is a level flagged in the note, right? And again, I'm not flagging something off of a moon cycle and a sequence, blah blah. It's just where are the big positions? There's a huge position sitting there. You can see it plain as day. And not only that, 60+%, oftentimes now 65% of options traded in the S&P 500 now are zero DTE options, right? They don't exist before the market's open and they're gone by the time the market closed. So you actually can't predict oftentimes where that volume's coming in, right? Because it happens after the market opens. So you see the position, that's the position. And then there was this huge put position at 6180 as well. So what happens is the market goes down, right? And it tags that. It's like a flash crash, obviously. And we put in this low right here at 6200. The chart, by the way, is real time when you're watching it. I know I'm replaying the replay in 10-minute increments, but we bounce right off that level. Not only do we bounce off that level, you see whoever had these puts here, they started to close them. And that took all this pressure off the market, and the market just rips, right? So
You tweeted yesterday. Sorry, you tweeted 6180. If you know, you know, right?
yeah,
You
and
tweeted
you
it
can
right as that news hit.
and you can see that stuff happen in real time, right? And so and you can trace the timestamps to the market movement. It's not like a thing where it's like, hey, I don't know that the market's going to go down on this day, right? And to show that this is what we were talking about with Alex is that on Wednesday morning we talked about this, right? We right here, right? We flagged the 6180 zero DT put. First support is here, and do I know that the market was going to go down because Powell said something? No, I have no idea about that, right? But if you show me the market down, I can all of a sudden go, okay, it's an if-then scenario. If you're going to pull me down to 61 or 6,200 and those puts get closed in this case, then I can have a pretty good idea what's going to happen, right? So those are the scenarios, right? And as traders, it's the probabilities, as you mentioned, I think just a few minutes ago. It's like, what are the probabilities of these things happening, and what should I watch? If you're not watching the options market, you have no idea that person just traded several $100 million worth of puts. I think it actually ended up being almost $1 billion of delta, $1 billion of hedging flow in the case of about 5 minutes, right? And so, those are kind of the things that get unlocked when you watch a lot of these positions. So, those are the really interesting index trades. I know there's a lot of questions about single stock stuff. So, if I could, I'll take a look at NVIDIA, for example, and we'll just explain what you get when you look at these positions, right? Um, okay, so this is our positioning for NVIDIA, and if you're familiar with the options market, in Gamma, for example, or GEX, you've seen this. If you're not, don't worry about it. It's pretty simple. If the bar is up here, if you see a huge positive bar, that's like a sticky area for the stock because the options market makers want to pin to those levels. If you see big negative bars, right, that's telling us that options market makers are going to chase the stock and there's going to be a lot of movement, right? So like low volatility, high volatility. So you go, well, Brent, why does this matter? And look at these numbers right here, right? 170 and 173 are these giant, and this is $400 million of flow, right? That's dedicated to pinning the market here. And that's significant, even in a name like NVIDIA. So what does that mean? That means if the stock starts to rally, the market maker is going to try to pin it down, right? If the stock starts to drop, they're going to try to buy it back up. They're going to try to lock it in there. And so this is the dynamic with the stock right here. Now, 2 days ago, right, I think it was on Tuesday night when everyone was yapping about the H20s to China, right? Wasn't that the case? So I posted this on Twitter, right? And I always like the stuff that you get flamed the most because that's probably the stuff that you're most right on. And there was these quote unquote hedge fund analysts, and they say, oh, it's going to 180 tomorrow. It's going, this is it. It's going. And I posted like, that's your feeling, like that's cool, but look at these giant positions at 170, right? And the stock was, I think, around 165, as you could see. And so, this is, what is this? This is some hedge fund that's short a bunch of calls, right? They sold the calls and they're betting that the stock's not going to go up anymore, right? And that's a huge position. So you look at something like that, and then you kind of look at what the stock did, and it just sort of stuck to that level, right? It's gone, and this is today's chart, but it's basically hung, or excuse me, this is the chart from the 17th. Sorry, that's the chart from Tuesday. This is the chart from Wednesday, right, the day after, and it just stuck at that level, right? Here's that giant strike, and it just stuck there. And so, if you had kind of gone over your skis and were uber bullish on this and expecting a 20%, price rally the next day, you probably didn't lose money because the stock didn't go anywhere, but it allows you to sort of objectively say, well, this guy on the internet says that this should go up because it's $20 billion of unlocked revenue, but the options market is just positioned for nothing. And then further, if you look at what happened the next day, right, this is yesterday, the chart didn't change at all. So
I mean,
if
I would
$20 billion
add to
of
that.
flow,
Yeah,
if $20 billion
yeah, I was
of
going to
flow
say,
was unlocked, some hedge fund would have bought some calls, right? You would see
yeah.
these negative bars show up here that told us that the market makers now have a bunch of risk, like, chased. It just didn't happen, right? The positions didn't change.
And also, who is it you think is tweeting, it's going to the moon? Is it some guy that's trying to help you? I mean, it might be, right? It might
Might
be a
be.
publicly spirited individual that wants everyone to, escape poverty. It could be, but it
Yeah.
probably is. It's probably a guy who wants you to take the opposite side of their trade, most likely.
Yeah, that is kind of very true. And so, objectively, you look at these positions, and the thing about it is, we give you the sizing of the position, right? So the more green it is, the bigger the options position is, uh, and so, you put all this stuff into context. The context is critical. It's like, okay, huge positions, they're all, options market makers are there just to kind of pin this thing down. So this is kind of this resistance sticky area. But then guess what happens now? This is super interesting, right? So let's say we remove tomorrow's expiration from the equation. See that purple line that has this huge pinning flow, right? It all goes away. That the next projection for what's going to look like on Monday is all that sticky flow is gone. So does that mean that NVIDIA finally really untethers from this 170 area? I think, right? Does that mean it goes up or down? We have to add a little bit extra to the analysis. But if you're trading the stock, right, and you want volatility, right? Volatility exists on the way up. You want a stock to go up 5, 10%. Well, maybe this unlocks that, right? Or maybe this unlocks a little bit of a correction. But this is the key. Like, we kind of unpin from this level on Friday. And another one too, which has a giant position, just in case, I know it's the heavily traded one too. These really big positions, and I gotta move to today. So this is what today's position like. Look at this strike 700 in Meta. I mean, massive, right? And stock can't really pull away from that. Now this has a small decrease in the positions after, right? As you can see, that yellow line is a little bit more negative. But again, that 700 level is huge in Meta because of the way that that the market makers are positioned. Now,
Brent,
Alex, I think you had one or two other names you want to look
yeah,
at.
no, it's okay. I have one more question for you, which is
Sure.
no, we're gonna cover some boring stock stuff after you've gone. You're welcome to stick around, of course. I have one question for you, which is so if I want to sign up for SpotGamma, and I don't know, you offer a bunch of tiers and services. Where do I start? Right? Where do I go to on the site, and how do I know what's right for me, and where do I start? How do I do
Yeah, that's a fantastic question. So number one, I wanted to offer up a discount for everyone's first month. So if you use the code Cestrian50 at checkout, you get 50% off your first month. So with the
That's very
50%
kind. Thank
off,
you.
if you go with the Alpha membership, which is our highest tier membership, you get every tool in the system, right? And the reason we like to give the 50% off is because you want to get in, get your feet wet. It takes a little while to figure out this is for you. So you have the whole month. You don't like it after the first month? No big deal, right? You got 50% off. We have under this resources tab, hours of video content. We just started doing this thing, sharpen your skills, where you go through every part of this platform. We actually teach you about the options market. So you kind of get an embedded options education in here, which I think is really valuable. But there's, you can see the replays in here, just to give you an example. Just a ton of webinar replays in here. We just did this series that goes through every single part of the platform. So we call it the Sharpen Your Skills series, that explain how to put this right to work. I do twice weekly Q&As on Mondays and Thursdays, so people come in. There's a Discord room. There's a whole bunch of support. So this is a lot. This is like a new language for a lot of people. We do some hand holding and we try to bring you all up. And I really believe after you're here for like 6 months, like you can talk options with pretty much anybody on the street, right? Maybe not some
Yeah,
French quantitative kind of people, but
I'd butt in there and I would say there is a world of scam stuff about options on the internet. You can surrender your money any day of the week to some terrible nonsense. And what 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 you get with Spot Gamma is, first, the most important thing is you get a market maker perspective. Okay, so you're not talking to someone who's basically trading in video options every now and then. You're talking to someone who's sat at the center of the options market and sees it from the market maker's perspective. If you want to make money in options or use options to make money in stocks, you have to see things from that, Olympus point of view. Right? It's no
mm,
good listening to a sort of a YOLO trader calls puts. That's no good. You have to see how the universe looks from the market maker's desk. That's how you make money with this. And you have that with Brent. And then Brent's built a great team around him. They've got incredible software tools now, great visuals, as you can see, and the content's terrific. But would you mind if we open mics? Would you take a few questions? Would that be okay?
sure, absolutely.
Okay. All right. How about it, folks? Let me see who's on. Kathleen, do you want to go? Let me see if we've got you. Okay, Kathleen, you just need to unmute you. I'll try this end. Hang on. Still on mute.
Well, we're waiting for
Can you hear
Kathleen to
me?
come on. Oh, there we go.
Okay.
Yeah.
Yeah, we hear you. Yeah, go for it.
Okay, Alex, this is Ron. Brent,
Oh, hey, Ron.
thanks for the
You jumped the queue.
presentation.
Go ahead. Welcome,
Sorry,
Ron.
Ron.
Just a quick question. You say for more information on pricing and levels, we just go to spotgamma.com, and then where do we go once we're on that website?
That's exactly right. So if you go to spotgamma.com, hopefully you can see my screen here. There is pricing right here. So if you go to a monthly plan, and then this is you can use the 50% off for any of these memberships. And honestly, I think the alpha membership, I know it's the most expensive one, so you're saying, yeah, but you're getting 50% off, and that's where all the tools are baked in. And so a lot of times what happens is people start off, they use the 50% on the alpha, and they're like, look, can I just use the standard one because I want to get Brent's note? And we're not here to lock people into stuff they don't want to use or don't need. So our customer service team wants people to get value out of this stuff. So if you just click on that pricing level, standard gives you what we call our founders note, so you get my morning commentary basically. But if you want to look at the heat map and those different things, that's this alpha membership. And you can do monthly or annual plans. And again, 50% off that first month. So if you need any help, if you're like, hey, I tried this, I'm confused, we'll give you some information. We give you education. We try to lift you up and bring you up to that, understanding how the options market's moving things. But we're here to build long-term customers, right? And so if you figure out that this is just not for you, let us know. We'll work with you on it.
Okay, thanks. Sorry to jump the
Excellent.
queue, Alex.
No problem at
No, that's
all.
great. Thanks a lot, Ron. JM, as you're registered, we have you. You're also on mute. Everyone's on
Hey
mute.
guys,
Hey, no, you're on.
thank you so much for the presentation. Appreciate it. This is absolutely spectacular because you know what? I've worked with a lot of YOLO traders, and I'm really heavy into options trading now, and this is pretty much my day job, right? Aside from what I do occupationally, but I've been following Spot Gamma for a very long time, and you know. I'm gonna go on the call and admit that I've been wrong on many occasions and not following the advice that you guys have provided. But again, because you guys have a platform, so you guys don't share a whole lot of information, and things are very dynamic in the options market, so they change very frequently. But be able to pivot based on that information, I think the trace map is something that I think I absolutely need. And my question to you, which I actually DM'd you, but you answered there a little bit. You said it's a 50% discount off of first month.
Right.
If I was to subscribe to an annual membership, how does that pan out?
That is a good question. So I will be honest with you. So you start with 50% off your first month.
Right.
We historically have offered Black Friday sales, kind of like into that November timeframe.
I did miss that, by the way. So I did
Yeah,
miss that.
so we always give a pretty good discount around that time frame. So, this will carry you through like September-ish. And so, if you're interested in signing up, I would just say like, and you're like, hey, I love this after the first month. Can you give me a little something on the annual? Uh, just email customer support. We'll reference the conversation with Sestrian and see if we can work out some kind of a little bit of a deal early. So I'd love to hear that you want to upgrade to annual because you love it so much, and we could probably work out some kind of a discount on that.
Yeah, no, absolutely. And that was the whole thing that, I was about to subscribe to the Black Friday sale, and then I don't know what happened and I just kind of wandered off, but that was a great
Life,
discount
man,
off
life
of the annual
happens.
membership.
Yeah, I totally get it, and thanks for the kind words, and at the end of the day, like you got to make money back on this thing, right? So it's like an investment,
Yeah,
and it takes a little bit. Like you got to get your skis under you and say, okay, this is the data, this is the information. Now I understand what's telling me, and then I could trade on it. So it does
right.
oftentimes take a little bit, and so that's why I think like start with the monthly, get the first 50% off the first month, and you're like, this is great. I've done a couple trades, I'm making money. This is wonderful. I want to sign up for the annual, get a better discount. Just let us know, and we'll work something out with you guys. And
Lovely. I will go ahead and say that, Brent, and I'll mention the call as well that we spoke over the phone. I have
yeah,
another question for
like
you.
I said,
You pulled up.
I'm sorry. Go
Sorry.
ahead.
Yeah. You pulled up NVIDIA, and I just wanted to know. So this is something. It provides option screener for all the stocks. Like, I mean, I heavily trade with certain stocks on a regular basis, but then I also trade in Nasdaq and SPX. And I know a lot of traders usually trade futures and stuff like that. I haven't dabbled my feet into the futures game, but I do like to understand the levels where gamma levels would be sitting on Nasdaq and SPX. SPX you showed. Is that like, is it the same thing? Like, we can see anything that we want here?
Yeah, all U.S. listed options are in here. So, not every stock has a big options position, but the Nasdaq is. I usually look at the Qs because it's a much bigger options complex than the NDX. So you can see the key levels here in the Qs, or again, any U.S. listed stock doesn't mean that the U.S. listed stock again has big options position, which is why we built this kind of like scanner up here to help you. But you can set up your watch list. You can really customize this to see the stuff that you want to see. And as an options trader, I'm always looking for idea generation, right? It's like I hate feeling like I missed something. So show me the names that have really expensive calls or really expensive puts, so I can put some trades on or whatever it may be. And so these scanners are really great for that. For example, we're looking at this stock called MP, which
Yeah,
things up just at a ridiculous level, and so you can add in data in there to see like, okay, like how expensive or cheap are these calls, right? They're their most expensive calls they've been in the last year, for example. If you
right.
hover over SMCI, you see how expensive the calls are there. Before I was telling everybody that, hey, I think the market's kind of overbought. I'll just give you an example of why. So in our
Sure.
in our grid here, if I click call skew percentile, so call skew just measures how expensive calls are, right? So the higher that the data points are at the top of this grid means the more expensive the calls are more expensive, right, relative to last year. Does that make sense?
Yep,
So
that makes sense.
if
Yep.
you look here, all of these names have calls that are now more expensive than at any point over the last year, right? And so that to me is like another kind of like flashing signal that, hey, like this is pretty overbought in all of these top stocks, right? And if you look at the sector ETFs, you get the same flavor, right? Where I bring this up and you see like XHB, right? XLB, gold, like XLY, all this stuff is like the most expensive calls they've been in the last year. And when you start to see these things group like that, it's oftentimes a signal of like, okay, like it's one thing if one individual stock is extremely overbought, right? Which is what the calls is telling us. But it's another thing when you see that kind of theme across a lot of names.
Right. And that generally entails that, we're overbought essentially, and there's going to be some sort of retracement in the market on those
I
names,
think so,
essentially.
yeah. And the reason I
Yeah.
think so is because if you buy an XHB call right now, for example, right, you're paying the highest price that you've paid in the last year, and you're betting on that bullishness to just continue, right? And you need excessive bullishness to continue to in order for you to profit. And if you pay calls, if you buy calls that are too expensive, guess what? The market makers love to sell you those calls, right? So
Yeah.
they love to sell at the highest prices, knowing that that momentum's likely to stop out. Like that's kind of the way that the cycle works. It's like retail bids
This sort of
stuff up, it
data,
gets too expensive, and it's the
this, like
cycle
I
of
say,
life, right?
this sort of data here is also really useful. I mean, if I look at my own trading, so my options trading is pretty limited. I tend to do pretty basic stuff. So when the VIX is absolutely on the floor, IV is low, options, buying puts is cheap, then I tend to buy longer dated index ETF puts just as a bit of portfolio insurance. And if they go down, I don't tend to put too much money to work, and if they go up, it helps me on a correction. That's great.
Mm-hmm.
But most of my work, I tend to use long, short index ETFs for the bulk of my capital. And so these tools are great to work out when should you be winding on, the inverse ETFs. So personally, my method, I tend to use hold the long ETFs for a long time because stocks generally go up over time. And if I think there is a period of weakness coming on, I'll wind on the inverse ETF and hope to make some money on the downside. And if I execute it well, I'll cash those gains, somewhere near the lows and roll the profits into the long side. That's the theory. The reality obviously varies a little bit from that time to time, but
Right.
that's the theory. And it's not a bad method. The core skew data can help you work out, well, we can all think we know when the market is going to top out, but that's just feeling and opinion.
Mm-hmm.
We can use stock charts to help us, and we can use momentum indicators and all that. But if you then overlay a whole new lens of the options market, then calls getting really expensive and market makers delighting in selling those calls, that's another piece of evidence in the fact pattern that says,
Right.
okay, is it time to wind on the hedges right now? So again, another
Yep.
example of, even if you're not a big options trader, and I'm not, why this stuff is still super valuable, because the lens you're getting, the perspective you're getting is from a huge weight of capital. That's why it's valuable.
Yeah, I think that's a great way to put it. And when you see, for example, on this grid, right, when you see a name like gold show up in the top right quadrant, right, that means that calls are extraordinarily expensive, and that more times often than not is a signal that the move is done. Because to your point, how do you know when the move's just getting started, right, versus like it's overdone? And the higher we go on this grid, the more overdone we are. And kind of on that point, I would just give this one piece of interesting information, right? The IBIT, which is the Bitcoin ETF, as just an example, when you look at the price of calls, like on this grid here, um, they're just not expensive at all, and it's such an interesting thing because it's sort of like, well, when is the high going to be in for IBIT, and you can see it's right here, right? So the calls aren't very expensive. The implied vol is not very expensive. And so it's like, do I think the move is done just based on the options data? Like, no, not yet, right? Even though it's up so much, you go, that's crazy. But if this was to show up in this top right, then I'd be like, okay, we've gotten way over our skis now. It's time to it's time for this kind of like chase to end, right? And so I just use that as my navigation tool because it's just stats, right? It's just math and stats, and it's not emotional kind of conjecture.
Exactly. That's great. Time for one more question, I think. George, you're on. Can you unmute, George? We have a mute problem.
I struggled with the go-to software myself, so no worries on that one.
Yeah. It's like 1990s technology, but it is reliable. It does
That
work.
makes me feel like a
Can I
boomer
ask a
more.
question again?
Oh, there it is.
Yeah.
Just because you have that chart up there and I'm interested in silver, can you give me your interpretation of silver in that quadrant there?
Yeah,
Please, Brent,
absolutely.
be careful. Right, Mark is really smart, so be careful. If you ask me a simple question, I can tell you it's a whip smart question. So be careful.
So when you look at silver here, right, you see the more we are to the left of this chart, put prices are higher relative to calls, and this is based on the individual name, right? So put prices are relatively expensive to calls, but the overall cost of options is not very high. So what do I mean by that? If we were at the top of this chart, then we would say that call options or options prices are extremely expensive, which is the biggest signal of overbought, oversold, right? So, for example, if silver dropped 20% tomorrow, I guarantee you that this dot would be at the top of this chart, right, telling us that's oversold. So right now, what you see in silver is not a lot of crowding based on the fact that puts have a little bit of an elevated value. And so that's kind of what you see on that chart. If you go to, and we'll just look at Equity Hub real quick. So Equity Hub is going to tell me how people are positioned in the ETF, right? And I know that the ETF is not the same as the commodity, but I love to look at the ETF because I figure that the positioning probably mirrors each other, right? And so what I see in silver, and it's at $34 right now, right? All of these positions are negative. What does that mean? That means that people are long calls or long puts, right? And so that means the dealers are going to keep the momentum moving. So if I was bullish on silver and I was saying, hey, do I think that the move's done yet? I look at this day and I say, well, the calls aren't particularly expensive. If anything, there's some maybe a little bit of hedging, right? Because those puts are a little expensive, or they're expensive relative to the calls. And there's still these big positions in here, right? And they don't get massively reduced with options expiration, but there's still all these positions in here that should keep the momentum. So if we were, for example, at 40, I would look at this chart and I would say, I think you said, Mark is your name. I said, Mark, there's no positions above here, right? Why aren't hedge funds long calls above 40 in SLV? Why is nobody long calls over 40 in SLV? I think the move is done from that perspective, right? But that's not the case. And to the downside, there's no positions really under 30. So I look at this and I just say, if you have a bullish thesis in silver, it's certainly not overbought, and there's plenty of reason to think that it has, the ability to move up, up into the, I would say $35 to $40 price range. At 40, I'd be like clearly overbought, and honestly, if it dipped down to the 30s, I'd probably look to buy, right? Particularly if the puts get rich. So that's kind of when I look at the ETFs and kind of glean from that, and so again, if the calls were rich at this point, then it'd be another knock against the bulls. But right now, there's plenty of positioning to support upside if that's kind of the position you're in. And I don't see any kind of panic or positioning that says that people are trying to hedge in a big way to get out.
That's great. Thank you, Brent.
Sure. Hopefully that was helpful.
Yeah, that was great. Look, we've taken a lot of your time, Brent. We're really appreciative of coming to talk to us today. So we're going to do this. We're going to do a shortened version of our usual weekly webinar. We've got some stuff to go through. We're going to talk about Ether treasury companies that folks might want to stay on for. And then we're going to run through some of the key tech names. We'll do ASML, TSM, as they just reported, Apple, Marvell, and a couple of others. So anyone who's joined, please do stick around if you want to hear about that. The Ether treasury companies is a really interesting market development, I think. We'll talk about that. Brent, obviously, welcome to stick around if you've got better things to do, which I hope you have.
I got a report I got to write. PM report I got to write.
So don't write a report. Okay, well, listen, thank you so much for coming to join us. That you do fantastic work at SpotGamma. So again, if you're on the call here, and we'll post this on the YouTube later on, Cestrian 50, CESTRIAN 50 gets you 50% off your first month with SpotGamma. And I think the service is terrific. I highly recommend it. So
thank you so
Brent,
much.
Thank you so much.
Appreciate it for everyone's time. And look at this, over 250 in TSM, there's no positions. So not a coincidence, right? That is stopped there. So I'll leave it with that. All right, we'll see you all later. Thank you so much.
And that you see, that's a good example. That perfectly ties up with, if you do your technical analysis right, that will tell you that, distribution, asset management distribution should be happening somewhere between 230 and 280 from memory. And so that ties up with the options positions. Again, this is just really useful. A different perspective from a big weight of capital can really help you with your trade. So, Brent, thank you.
Awesome. Thank you all so much. Have a great night.
All right. So do you say. Okay, folks. Well, hope you enjoyed that. We are now going to run through a couple of topics that we had in store for today. I'm going to start actually with Ether treasury companies. And we're going to talk about a company called Bitmine Immersion Technologies. I'll put that on the screen right now. This is a Tom Lee and Peter Thiel company. Let's get this on the screen right now. It's a really interesting business. So for those of you who are heavily into crypto, you'll know some of this. For those of you who are not, this is worth talking through. So you'll have heard of Ethereum. It's the second, or Ether, it's the second biggest cryptocurrency by market cap, and has been something of a laggard of Bitcoin, to say the least. So the weight of capital, media focus, all of that has really been in Bitcoin. And you've seen Bitcoin propel to new all-time highs recently, and you've seen the levered play on Bitcoin adopted by MicroStrategy, MSTR. Well, there's a chance that the same thing's going to happen with Ether, and we're tracking this pretty closely. If you go to our website, sessioncapitalresearch.com, you'll see a ton of work in the free section on Ether treasury companies. Here's what's happening. Tokenization is coming to financial services. What does that mean? Well, tokenization is the digital representation of currently untradeable assets, right? So you can trade NVIDIA stock, but you can't trade, the Palace of Versailles in France. But you could trade it if the French state decided to tokenize it, turn it into a digital representation of that, and it could break up those tokens into either claims on ownership of the palace, be a little bit like a common stock, or more likely, maybe a part claim on ownership, but also a bunch of other rights, like the ability to visit 2 times a year without paying, something like that. The big shift that's going to happen is that private market funds are going to get tokenized. And what that means is there is an additional source of liquidity available for private credit, private equity, real estate, and a whole bunch of other private capital that is not available to them today. They are untraded funds, as you know, and so you have to be typically a large institutional investor with a particular desk that trades those things to get access to them. Well, that's going to change. BlackRock is sponsoring this. This isn't sort of a backwater activity. This is core change in the financial services market. If you're going to tokenize things, if you're going to digitize things, you need a database of record for what the tokens are and what they represent. And the database of record looks like it's going to be the Ethereum blockchain. Why? Because the Ethereum blockchain is capable of registering a number of things. One, a claim on ownership, which the Bitcoin blockchain can do, but also it can recognize additional contractual rights and obligations. You'll see that even 10 years ago, the Ethereum Foundation was talking about things like smart contracts, and you can think of a smart contract as a contract. So it looks like the Ethereum blockchain is going to be the dominant database of record. The way that the blockchain works is you have to pay to use it. You have to pay transaction processing fees. In the old days, in the 80s, you would pay AT&T, the telephone company, to process transactions, database transactions on the Tuxedo transaction processing platform. And you pay them in dollars. Well, as tokenization progresses, you're going to pay the Ethereum blockchain in Ether, the cryptocurrency. You'll see the term gas fees. It's just transaction processing fees. Now, to get the currency, you have to buy some Ether. You have to change it from US dollars to a stable coin to Ether. And the bet is that these companies like Bitmine, BMNR are taking is that this is going to be a big and important transition in financial services and other industries. And I think they're right in that regard. I think that the source for liquidity for these private market funds is a serious one. I think it's a real endeavor by BlackRock and a bunch of other people, and I think it's going to happen. Bitmine and another company, SharpLink Gaming, and a few other smaller ones are setting up to be a MicroStrategy for Ether. What does that mean? It basically means they are setting up to be levered single asset investment trusts. What does that mean? It means that they're a holding company that buys and stacks a single asset, in this case, the Ether currency, and they will use leverage to do so. They'll raise partly equity, partly debt, and they will attempt to replicate what MicroStrategy's achieved in Bitcoin, which is if you want to get levered, amplified exposure to Bitcoin, one way to do it is to lever it yourself. Another way to do it is to take advantage of the cheap leverage that MicroStrategy enjoys because of their scale. When a market's going up, a levered long strategy is a terrific thing. It's a thing of beauty. It obviously carries risks. And the risks of this approach are, one, Ethereum doesn't really get established within big markets, or two, being able to raise equity or debt at attractive prices doesn't really happen, and so you're not really able to arbitrage between the cost of dollars and the cost of ether to accumulate them, or the constraint in supply of ether is somehow goes away or works against you. There's plenty of risks. But if you've seen what MicroStrategy has achieved, and if you look at the characters involved in the Ether Treasury Company effort, this is pretty new in the last month or so, and there's a good chance that they achieve something. The biggest company by amount of Ether owned, which is about $1 billion worth now, is Bitmine Immersion, ticker BMNR. I'm long this stock, by the way, to disclosure. Two events recently of note. Tom Lee, a fund strat who you'll know, very successful investment commentator and fund manager. Pretty unusual, very, very bullish, permabull, you could say, but so far it's been right over his term of investment. Tom Lee's become chairman of this business and bought some stock. And then Peter Thiel, who needs no introduction, bought just under 10% of the company a few days back. This is the stock chart you see here. The stock had done nothing for forever. Tom Lee joins, the stock moons from a few dollars up to $160 on very low volume, as you can see, settles back down. It's currently sat at around the 78.6 retrace of that move up. And volume is picking up, as you can see by these grey volume by price bars here. So there is a good chance, not definite, but there is a good chance that this is some accumulation of the stock going on here. People thinking that, okay, well, this has been the run up, this is the sell down, there's some support here in the mid 30s. I think I'll pile that here. And I've been following this strategy personally, and we have it as a swing trade idea in our subscription services. Who knows where the stock will go, right? But I think that has a chance of running up quite nicely. Two reasons. One, the fundamental change in the financial services industry that lies behind this. And two, a pretty aggressive marketing campaign by the companies themselves on social media and elsewhere. So the two big names, I'm along them both, are Bitmine Immersion, BMNR, and SharpLink Gaming, which is SBET. We cover these extensively in our work. And if you go to sessioncapitalresearch.com, again, if you look at the free section, you don't have to be subscribed or anything, you'll find a ton of stuff on those companies. There's a search box on the site, and if you type in the ticker, you'll bring some stuff up on those names. Okay, we're going to move on very quickly and just look at a couple of the big stocks. We're short of time right now, so for those of you who are subscribers, I will deal with this in chat later on, but just a quick look at one or two things. Let's look at Taiwan Semiconductor, which reported today. So this is a long run chart we have for Taiwan Semiconductor. Great numbers reported today. We posted a note in our subscription services and also the summaries on X. Numbers are great. Revenue growth very strong. Cash flow margins probably peaked. They've come down for the last couple of quarters. Balance sheet, as good as a small country or even a big country. Stocks run up, and you just heard Brent talking about the lack of any option positioning much above the current level, and that ties up with any sort of sensible technical analysis you might do will tell you that the stock is probably extended right now. We use, as you know, the Elliott wave and Fibonacci method, and by that method, we think this is in a wave 5, a final move up of a cycle that started back in 2019 in this case. And typically, if our pattern is at all right, you'd start to see some distribution, by which I mean large asset managers taking gains somewhere between 230 and 290, something like that. So if you were a big asset manager and you'd either been buying stock down here, we had this rated at accumulate between 58 and 76 back in 22, 23, or if you just bought this ginormous dip back in April, you'd be feeling pretty pleased with yourself and you'd probably be thinking about taking gains around now. ASML reported yesterday, which, as you know, is a monopoly provider of extreme ultraviolet lithography machinery, which you have to have if you're going to make chips or advanced chips at any rate. And let's just take a look at what the stock did. A poor reaction really on earnings. Numbers were fine. They were not aggressive on guidance. Management team tends to sandbag a bit in my experience. But here's what happened. The stock, this is the run up in ASML from the April lows. So we have a wave 1, 2, 3, perfect wave 3, a 1.618 wave 3 extension, wave 4 down, thinks about testing the 200-day right here. This is back in 20th of June, holds and runs up. And then a wave 5 high Tuesday this week at 827. Here comes earnings, and the stock does two things. It drops below the 8-day moving average, so that tells you that there's some short-term weakness, and then it drops below the 50. It holds at the 200 again. Okay, so you see this big green bar on the earnings day yesterday. A lot of volume holding at that 200. So it looks like for now around, let's say 727-ish is going to hold a support. Stock was range bound today. I'm stuck between the 200 and the 50. So if you're bullish, you want to see this come up and over the 50 at 765. And if you're bearish, you want to see it break the 200 from above and drop below that. I would be surprised if it broke the 200 anytime soon. But you never know. In this time frame, typically after the end of a wave 5, you see that the stock shed all the value created in that wave 5, which is pretty much exactly what happened here. And for now, we still have flattening out 200-day that's been in decline for some time and a rising 50. So I would say probably the 200 will hold. We'll see. If the 200 gives way, a good phrase I learned from someone else was nothing good happens below the 200-day, and I believe that's true. I'm just going to do Apple, and we're going to finish on that, and then we'll pick up anything else for subscribers in chat later on. Apple, as you know, is in a little bit of a mess. Right, so here's the April lows. We've had a 1 up, a 2 down, held at the 50% retrace. That's pretty good. Apple, often very strong stock in times of weakness, but it's really struggled to climb up. It's still not over its 200-day here. That's a purple line. It's holding over the 50. It broke up and over the 50 at the end of June. It's held over it. It has, let me switch that off 1 second. It's right sat at the 8-day, and it needs to decide what it's going to do. All the reasons for its weakness: lack of AI story, problems with potential tariff impact to manufacturing, and so on and so forth. But this stock really doesn't show any signs yet of a real breakout. What do you want to see if you're bullish? You want to see, first of all, the 8-day moving average hold. You want to see it hold over around 210 and start to move up from there. And if you're bearish, you want to see it drop below there and then break this 50-day at around 203. Okay, we're going to finish up in a moment, but why don't we just take a few more questions if we have any. Microphones are on, so anything that Brent talked about, or any of the stocks we just covered, or the Ether Treasury companies, have at it. So if we have any questions, please do have at it, folks.
Hi, Alex.
Hey, Richard, how are you?
Hi, good, thanks. Yeah, thanks for that. And I just wanted to ask a bit about the 8-day moving average, because you're starting to use that more and more. So just maybe a bit of background on why you think that is important as opposed to what we've been obviously looking at 50 and 200s.
I saw it on Twitter and I started to use it, and I thought, well, that's quite good. That's the honest answer. I can give you, I can tell you if you like about my deep scientific research, but that's the truth. Which is, I've seen 1 or 2 other folks use it, and it's not bad. I mean, nothing's perfect, but that shorter term moving average, just to state the obvious, gives us a little bit of a heads up as to breaks of direction, and it seems to have some validity in the stocks we cover. So if we look at, for instance, let's look at Bitcoin. Yeah. So Bitcoin, quite nice. This is the red line. It's the 8-day, holds it all here. There's a run up here back in the 10th of July. Sell down, hits the 8-day, bounces, moves up, holds the 8-day, holds the 8-day. Ether, same story, holds it. Sells down here on Tuesday this week, holds the 8-day. So nothing's perfect, but I just find it useful as a shorter term, shorter term indicator. If it's holding there, good chance it moves up. It breaks the 8-day to heads up, but we may have further to fall. So nothing more scientific than that.
Okay, no, that's good. Thank you.
All right, great question. Thank you. All right, folks, we're going to finish up for the day. Thank you so much for joining. I hope you enjoyed it and found it useful. We'll post the recording in a couple of hours once it's compiled and in HD. And then we'll post the SpotGamma discount code on the YouTube video. And any questions that you have, if you're a subscriber, great, reach us in chat. If not, hit us up on YouTube comments or on X, where we are at Cestrian Inc. And I'll put that in the YouTube video as well. Thanks, everyone. Talk to you all soon.
Thank you.